Hello friends, in the series on the income tax cases, today we will discuss the case of BLP VAYU Project 1 Private Limited versus Principal Commissioner of Income Tax. This case has been reported in 104 ITR Tribunal Short Note 72. The matter has been decided by Delhi ITAT A bench and the date of the judgment is 31st May 2023. As all we know that section 56 subsection 2 clause 7b was introduced to tax the difference between the issue price in which the shares have been issued above the face value of the shares, and if the assessee is not able to explain the securities premium or the difference in the fair market value and the issue price, then in that cases, if that price is not supported by the valuation report, then in those cases the assessing officer can tax the difference. In the case of the assessee issued 5,13,978 shares at a value of 1284 when the face value was rupees 10. The assessing officer checked the conditions of section 68, that is identity, credit worthiness and genuineness of the transactions, because the company to whom the shares have been allotted was a big company, was having substantial business and were being assessed over a period of time. The assessee has also submitted the valuation report of the shares also. So the assessing officer passed the order of at the returned income which was filed by the assessee. The Commissioner of Income Tax issued notice under section 263 for its revision by saying that the assessing officer has not checked the applicability of section 56 subsection 2 clause 7b and section 68. When the assessee moved to the ITAT for this revision, it was the point of the ITAT that in this case the Principal Commissioner of Income Tax does not have the jurisdiction of section 263, because in this case the provisions of section 56 subsection 2 clause 7b are not applicable to the assessee, because the shares have been issued to the 100% holding company. In case of 100% holding company, there is no benefit to the assessee, there is no benefit to the shareholders, because the controlling interest is with the same hands. So the general rule is that according to the various precedents that when the shares are issued to the existing shareholders or to the 100% holding company, then in that cases section 56 subsection 2 clause 7b does not apply. And in this case the assessing officer has already checked the applicability of section 68 also. So the revision done by the Principal Commissioner of Income Tax under section 263 was not justified. Friends, this case is very important because sometimes it happens that the revision is being done on the misunderstanding of the provisions of the Income Tax Act. So first of all, we should check whether those provisions are applicable to the assessee or not. Like in this case, because the shares have been issued to the company who was 100% holding company of the assessee. So there are numerous judgments which says that section 56 subsection 2 clause 7b are not applicable when the shares are issued to the 100% holding company. Friends, the main purpose of bringing section 56 subsection 2 clause 7b on the statute was to curb and to have a restriction on the black money which was being introduced by the companies. So if the shares are issued to the 100% holding company, then it cannot be said that there is some black money which is inflowing into the company. At the end of this video, once again I am repeating the name of the case. The name of the case is BLP VAYU Project 1 Private Limited versus Principal Commissioner of Income Tax, and this case has been reported in 104 ITR Tribunal Short Note 72. The matter has been decided by Delhi ITAT A bench and the date of the judgment is 31st May 2023.